Hey everybody, this is Jason with your weekly real estate market update. I'm a real estate agent with Compass in Los Angeles. However, this real estate market update is not just for Los Angeles or California, this is for the entire United States. So what some data is showing us is that home prices have decreased just a little bit for the month of July of 2021. And no, this is not a sign of a crash coming. No, this is most likely not the sign of real estate market prices dropping very sudden, and this is a huge trend for home prices to just completely go downhill for a year or longer. However, this is the sign most likely that we're returning finally to a more normal market. Let me explain. So typically in the month of July, a lot of the real estate prices, they drop just a little bit because a lot of people are gone for vacation. If people were going to move, they usually do it at the end of spring, early summer, or at the end of summer, early fall, so that way they could get on schedule with either a new job or their kids moving to a new school. People usually want to get settled in around that time before September. Real quick, you guys, if you will please like this video and subscribe to this video, that will help out my channel very much. If you're watching this video on TikTok or Instagram, go ahead and click the link to my bio. That'll take you to my YouTube page. That way you can see the full video beyond 1.5 or 2 minutes. That's the limit on TikTok or Instagram about that time. You see the full video, get the full information, and subscribe to my YouTube channel there, so that way you keep getting these updates, the full updates week after week. Thank you for that. So, like I said, it looks like we may be finally returning to a normal real estate market. And what do I mean by that is because currently we have a lot of people that are under forbearances. And what that basically means is people made an agreement with the bank to not pay their mortgage for 12 months, sometimes extended to 18 months. And that's good because that's been helping a lot of people from the pandemic who have been seeing a large financial difficulty. However, when it stretches after 12 months, it's time to, start figuring out something, whether you're going to sell your home or have a whole different life situation or figure something out. Extending beyond that, 6 months beyond that, okay, if you need that extra time, you need that extra help. There's a large group of people who have gone into forbearance and they didn't necessarily have any financial difficulty. It's, you don't really need to declare much. You don't need to prove much on paper to go into forbearance with your lender. A lot of banks and a lot of lenders just require simply that you just verbally declare that you're having a financial difficulty due to coronavirus. And I've met a lot of people, a lot of friendly people who just said that they're going into forbearance because they don't feel like paying their mortgage. Now, on the other side, a lot of people are coming out of these forbearances, and that's good. It means a couple things. Number one, it means that people are not having the financial difficulty either that they thought they would or that they had before due to the coronavirus. I've heard of a lot of people, a lot of landlords who said that tenants were going to leave in the course of 6 months to a year because they lost their job, and they're letting their landlords know, hey, can I continue with my lease because I got my job back? Financial situation is looking good. So that's really good. It's good for homeowners, good for landlords, and good for tenants. Now, I've been hearing people talk about, and I've been talking to a lot of people at the open houses that I'm at, saying that forbearances are due at the end of September, that people can no longer be on forbearance. And that is not true. So basically a forbearance, unless if you stop the forbearance or unless if you make payments earlier, forbearances typically last 12 months, and you can usually ask for another 6 month extension. And people have signed up for and enrolled in forbearance less than 6 months ago. It's not true that everybody would just simply come out of forbearance by the end of September, because people have enrolled in forbearance less than 6 months ago. So that 12-month span of the forbearance would go beyond that. Now, some banks are having a deadline to apply for forbearance by late September. And if you have a federally backed loan, so far there is no deadline to apply for forbearances. So it's, on one side, it's good that people can get financial help with forbearances when they need it. On the other side, forbearances kind of push this unnatural market that we've been having where there are no foreclosures, because even if you're going to lose your house to the bank, which is what a foreclosure is, why would you do that when you could simply just enroll in a forbearance where you don't pay the mortgage for 12 months and either hold on to your money or figure something out or sell it at the end of that term? So a lot of people are coming out of the forbearance willingly, and because of that, we're going to see more homes come on the market, most likely. You know, like I said before, foreclosures are not a pretty thing. They're not a positive thing to happen. However, they are a natural occurring thing in the market, and even in higher end neighborhoods like Brentwood, Santa Monica, north of Montana, and in Beverly Hills. Every now and then you have a foreclosure, and this up and down is part of the is a part of the market that usually happens. Are you guys excited to see a more normal market where buyers may have a little bit more of an upper hand than they've had in the last 2 years? Are you guys hoping that interest rates will raise and hopefully that will soften home prices? What do you expect to see in the future? What do you want to see in the future? And what do we think will happen in the next 6 months? Let me know in the comments down below. Thank you guys.